On this edition of India Tonight, let's talk about the outcome of the assembly elections. Yes, the caste card, Adani bashing, endless welfare promises. In the end, nothing quite has worked for Rahul Gandhi and his regional satraps. Modi's stock has proved to be that multibagger, while Rahul Gandhi's portfolio has slipped in the red despite the gains that were made in Hyderabad. Buoyed by the state victories, now Modi seems confident of returning as the Prime Minister for a historic third term, or at least that's what some suggestions are. Investors pretty jubilant. They foresee policy continuity. The Nifty has headed today towards the 21,000 mark. So now the question is it time to do some profit booking, or is it just the beginning of a wealth creation phase that now India seems to be entering? Let's go across to my colleague Sharad. He's here to tell us what the brokerages are saying about the BJP coming to power in 3 states. How is that reflecting in brokerage calls? Sharad.
The brokerages seem to give a green thumbs up when it comes to the state election results. And first we are having Nomura, and they have stated importantly that the downside political risks has been mitigated. Also, they have stated is that the BJP state elections wins should allay the market concerns going ahead, especially on the political part. Now, investors for the markets, it's most likely estimated that the developments will be positive in the run-up to the general elections. But apart from this, also brokerages such as CLSA have stated that the winter state polls do not always point out to the outcome of the general elections. There has been various instances from 2003 to 2018 where there has been a change of power when it comes to the state elections and what the result would have been in the general elections. But the overall CLS's view is 3 important things. The first is the BJP's dominance, second is the anti-incumbency, and thirdly is the anti-inflation welfare measurements which are undertaken. Apart from this, BOFA also came and they have stated vehemently that this is a decisive victory to BJP to favor political continuity. Apart from this, the margin of victory of BJP in these 3 states was quite encouraging, especially in this performance of Chhattisgarh state. Also, the brokerage house has stated that these few populist measures which have already been announced, and potentially we could see more of them coming in the run-up to the May elections. So overall, if we see a positive green thumbs up coming from the brokerages on the state election results.
That's what the brokerages are saying. Let's find out more how an economist views this. And for that, Garima Kapoor is joining us. She is economist and senior vice president at Elara Capital. Garima, great to have you on the show with us. The markets, they had been on the rise even before the exit poll results came out. And once they did, we saw that further excitement seep in. And now after the assembly election results over the weekend, we've hit the high notes yet again in trade today. So from that note that Elara Capital has put out, tell us how much this has to do with a sense of confidence that investors seem to have spotted about stability, about continuity of economic policy at the center, as well as the states. And do you think this is going to move the markets up even further?
Hi, Vikram. Thanks for having me. I think the biggest takeaway of the yesterday's results were political stability, because recall up until 3 to 4 months ago, most of the political pundits and the political observers were giving BJP not even 1 on 3 chance in the Hindi heartland. And we knew Congress was quite powerful, especially in its execution of policies, both in Chhattisgarh and Rajasthan. And Madhya Pradesh had a massive anti-incumbency of 18 years. Now, from that expectation of a quarter ago to have won 3 states hands down and with a slide, I think markets and the investors at large have taken cognizance of the fact that Modi's appeal remains strong. We need to note that these elections were not fought on any CM candidate face, and all they were fought on was on Modi's appeal. I remember watching some of the rallies of Amit Shah, and he indicated that if you want to see Modi in the center, please vote for BJP in the state. So it was a clear-cut test, or clear-cut, I should say, voting for the BJP at the center and Modi in general. Now, having said that, we clearly see an assessment that from here till next 6 months, one thing is for sure, the markets which were very concerned of what happens regarding various schemes and policies that the central government has launched in India, whether it is PLI, Atmanirbhar Bharat, defense indigenization, or signing of FTAs with various governments, or massive infrastructure spending, or DBT-led progress, they all are here to stay. We're talking in a context where the emerging market has seen quite a stir. We are already facing a significant amount of uncertainty regarding China's growth. Russia has been embroiled in a war. And then, among all of it, markets have been really looking for a relatively stable economy, an emerging market basket to invest in. And here, more particularly India emerges in the forefront.
Yes, indeed. Those factors do stand, Garima. But as we now draw closer to the general elections, notwithstanding political pronouncements about the freebie or the rave culture in these particular elections, do you see these populist measures that are announced take some wind out of the sails of the markets, even though we seem to be, doing all right in managing our fiscal deficit so far for FY24? Do you see this fall in capital outlay? Or perhaps the readoption of the new pension scheme now that the BJP is assuming power in Rajasthan and in Chhattisgarh? How is that likely to play out now?
The one big positive takeaway is going to be that the states where BJP has been voted back to power, they will revert to new pension scheme, or at least a hybrid model. Now, what Andhra Pradesh probably is executing. So at least the fear of going back to an unfunded pension scheme is outside the window, number one. Number two, when it comes to capex, I see immediate challenges on the states front. Remember, the significant amount of freebies that have been announced are going to have some kind of pressure on state finances. Now, particularly for a state like Chhattisgarh, which is a revenue deficit state, they will have to really create space for huge quantum of freebies and rollouts that have been announced. Now, 20 states that we track very closely, some of the large states in general, have seen that they have budgeted their FY24 capital outlay at roughly about 2.8% of GSDP, which has been nearly at a 6 to 7 year high. Now, from that number, we see this number coming close to about 2% or thereabouts over the next 2 to 3 years, because the impact of these schemes is going to be recurring in nature. So more than center's finances, I think the immediate implication is going to be state finances and states' capital outlay. And their states are pretty predominant in sectors such as urban infrastructure or roads. So that's where, or irrigation, these three sectors will probably see a pullback from state capex. So when it comes to center, as you said rightly, FY20 seems to be a smooth sail. We're not going to face any significant pressure because the taxes are running at a run rate higher than what the government had budgeted. But the problem starts after FY24. Now, assuming from now till the general election, the center does announce some scheme. Let's say hiking PM Kisan a dole out of 3,000 rupees or 4,000 rupees, or let's say a hike in Manrega budget, or the money that they have to fund for the free food grain program, which was extended beyond December for ultimately for 5 years. Now, that is going to be a recurrent expenditure. And from next financial year, remember, they have a target for FY26 of 4.5% of fiscal deficit that they have targeted and mandated. The problem starts next year or the year after. If they don't give up the target of 4.5%, I see very little chance that capex can go aggressively. More so, even if they let's say dilute the target of 4.5%, even for next year, with all new incremental spending coming into picture and the bounty of taxes normalizing as the gains of compliance come to end, you are going to find it difficult, or you're going to feel it constrained to be able to see capital expenditure grow at a rate of 25-30% that it has been growing for last 3 to 4 years. So here on, I see more normalized allocation for capex in the range of about 15% and probably a greater brunt to be borne by states, particularly those states who are revenue deficit, for example, like Chhattisgarh, and there will be less impact on states like Madhya Pradesh, which are revenue surplus.
Right. So, Garima, in your note, and very quickly at that, you mentioned that you expect rural and healthcare-focused stocks to step back into the spotlight. Do tell us, which are the sectors and the pockets in the market that you are likely to see more enthusiasm, more investor interest in, where Modinomics turns out to be most evident?
Right. Clearly, the kind of dolouts that are being focused are all targeted at the lower of the pyramid. They're not necessarily targeted at rural India, but a large chunk of it, especially for farmers, landless laborers, etc., on rural India. Then you have women as a community, which basically falls both into urban and rural. So I do see rural as a pack making a gradual comeback as the effect of these spending starts to percolate. Number one. Generally, consumer discretion should also do well in this scenario. Number two. And number three, I think the fact that in run up to these state elections, the government did not, neither the state nor the central government, cut the taxes on petrol and diesel and the pump prices. It does kind of give some bit of comfort, and maybe in the run up to central elections as well, the need for them to do so might be much lower. So net net, I also see probably oil-related stocks, particularly your downstream companies, also becoming relatively net gainers despite run up to the elections. And although I do anticipate roughly that there will be some pullback in capex momentum, generally sector stocks which are more diversified present, like Larsen and Toubro, which have presence across hydrocarbons, roads, rails, electricity, etc., will probably continue to see a relatively better outperformance vis-a-vis stocks of which have probably very concentrated performance, and let's say in a single sector like roads or otherwise. So these are net basis some of the things that I think could emerge as themes from now to next 5 months till we hit the election period.
We'll watch out for those. Garima, many thanks for joining us with your perspective on the outcome of the assembly elections and the kind of impact we can expect in the markets in the months to come towards the general elections 2024. Thanks indeed. We also had a word with ET Now's consulting editor, Swaminathan Iyer, about this. He shares his views on this victory in the elections for the BJP, how fiscal consolidation picture could be impacted. This is what he told.
No, I would say that the important thing that has happened is the global conditions. I would say the US soft landing is a very big positive for the markets. And once you get that optimism, it spreads. There was a considerable fear that 2023 is going to be a bad year. There were people who feared a hard landing and a recession in the USA. There were people who feared a lot of carnage in some European markets. The impact of Ukraine was unknown. It was a question mark. So I would say many of those things have gone. It's very clear the US had a successful soft landing. So when you see the conditions of, it looks like 4% GDP growth this year, which is far above what expectations used to be. With the prospect of continuing further, the labor market is red hot with 3.9% unemployment. And there has been a rise in wages, but it has not translated into high inflation, which is a very positive sign. So I would say these are the conditions that would drive the optimism of the markets. What's happened in India would be a small little stir. I mean, some India's specific funds may think, well, it's slightly better than before. But yet I would say they already have assumed, all of them have assumed continuity, all of them have assumed that Mr. Modi will be re-elected. That is why I don't think these state elections would make very much difference, especially when Mr. Modi has won quite well anyway.
So is the Modi magic intact? This is the word that we got from the Minister of State for Food Processing. Prahlad Singh Patel had this to say about the victory in the three major states.
नंबर एक है